Hi everyone, please check the pinned comment and let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting however with this multi-year volume profile. As you can see, the value area low was acting as resistance, as well as this support resistance area, which is the white box, support, resistance, resistance. But now we have a weekly candle that is moving inside the value area from 31.3k all the way to 49.5k. Now what is common is for price to retest a value area low or the support resistance area before continuation, but by all means, important resistance now is the 38.7k point of control of this range, as well as the 49.5k level being the value area high of this move towards the upside. If we go to the 1 hour chart, then the past couple of videos I have been talking about this low over here. This is the low of the 1 hour candle, but also the beginning of this 1 hour gap. And the first time you're testing a gap, if price moves down, there's a high probability you at least get a bounce and then you want to see continuation to the upside. But what is nice about that particular scenario is that you're also going to retest this support resistance area over here. You won't come down all the way to the value area low in that scenario, but at least you're going to retest this support resistance area for then potential continuation. If however price bounces here, can't find continuation and comes back, there's high probabilities you're going to fill the gap, meaning the value area low might be tested at 31.3k. If we then go to the 12-hour bullish scenario, then we are thinking about a running flat here. So a running flat, 3 waves in A being a zigzag, then you have a zigzag in B and a 5-wave structure in wave C, where wave C did not take the low of wave A. Now a running flat is very, very rare. It's the most rare flat pattern. Most commonly is an expanding flat. Then you have the regular flat where C does take the low of A, and then you have the running flat. Also most commonly, quote unquote commonly, because of a running flat being rare, most commonly wave C tends to go to the golden pocket taken from the low of A to the high of B, which of course has been passed because all these lows are made on the 886 Fibonacci taken from the low to the high over here of that wave B. Now in this scenario, we then of course expect continuation, and you don't want to see these lows being revisited for the upcoming many weeks to come. In the bullish scenario, we are then looking for continuation in a double 1-2. So in this particular scenario, we have a wave 1 in green and a wave 1 in blue for then a bigger wave 3 towards the upside. In this scenario, what's quite unique is that this second wave 1 and the second wave 2 are a little bit bigger in price, and wave 2 is bigger in price and time compared to the higher degree wave 1 and 2 in green, because in green we have a 1-2 and then eventually a 3-4 and a wave 5, where inside the green wave 3 we have the blue count 1, 2, 3, 4 and then eventually a wave 5. So the blue count is actually a lower degree count, but the waves are a little bit bigger and it still doesn't look great. However, counting this structure in another bullish way, for example 1, 2, 3, is in my opinion not valid, because then you have a WXY over here. But in a WXY, your W and your Y are not allowed to be the same structure in a sideways double combo, and W is clearly a zigzag and not a flat. So Y is not allowed to be a zigzag. It has to either be a flat or a triangle, and it's not a flat and not a triangle. So that is why a double 1-2 for me works better here. Now in this scenario, what is nice is that at least we had bullish CVD divergences, so there was absorption going on of market shorts with big limit long orders pushing price towards the upside. And if we take a look at the fibs, then this is always very interesting, because the fibs that you see over here are pulled from the low to the high of 1 to the low of this wave 2. The 1.618 is usually a minimum target for wave 3, and if the 1.618 is passed, then we can usually look for the 2.618, then the 3.618 and so on. So what you can see, which is nice, is that at the 1.618 we had a little bit of a range on the 4-hour chart. We passed the 1.618, moving to the 2.618. We closed above, but look at what's happening now. The 2.618 is now acting as support, exactly also what you like to see. Probabilities are high for price to move to the 3.618 eventually, which is sitting at 36k, which is also in confluence with my resistance box that I have over here between 35.9 and 36.2k. So that is very, very nice indeed. Of course, the range can continue here. We go into the micro in a second, but the 3.618 makes sense based on this analysis. Now, also, you're eventually going to be looking for a blue wave 4, which means you want to see a bigger retracement. Now, this wave 2 here was about 9 days in time, meaning that you want this wave 4 to be at least like 7 to 12 days in time. So as long as you don't get a range of at least a week, then it's very unlikely it is a wave 4, because wave 4 usually tends to be longer than a wave 2. Now, the retracement for a wave 4 would most commonly go between the 0.5 and the 382. The 236 is also in there, so that's why I put this box wide. But at the moment, as it stands, this support area for a wave 4 is not yet relevant, as we didn't yet spend enough time really to think about a blue higher degree wave 4 here. The invalidation is if price would continue to the downside and move towards the 0.618, which is sitting at 29.8k. If we then zoom in and we go to the more micro bullish scenarios, as we are then looking for continuation, then over here on the 15-minute chart, I have two scenarios to share with you. First of all is the flats scenario and then a WXY scenario. And they kind of lead to a similar result, but it's important to know the characteristics of both of the scenarios. Now, in this scenario, we're then having a regular or an expanding flat. That depends on the target area that you choose. Regular flat most commonly goes to the 105 to the 09, pulled from the low or the high to the low of wave A. An expanding flat usually goes up here, 1.236 to the 1.38 for a wave B, which is sitting between 35.6k and 35.9k for then an impulse to the downside. Now, what is important is that wave B is a three-wave structure. At the moment, this looks like a three-wave structure. If we do find continuation to the upside all the way to 36k, probabilities might increase for continuation, but that all depends on the reaction at the resistance area of 36k. Because at the moment, of course, this looks like a nice three-waver, potentially ending for a regular flat. So now you're going to be looking for an impulse to the downside, where then the 1 to the 1.236 target is important for a wave C of a regular flat, sitting between 33.3k and 32.8k. If price does move towards 36k and reaches this area over here, we have to first of all observe the reaction. In the video yesterday, I showed you what I am looking at when I observe the reaction, right? So make sure to rewatch that if you haven't. But then you're going to be looking for also a wave C to the downside, but the targets are going to be a bit wider and a bit lower. So for an expanding flat, you're going to be looking for the 1.618 here, which gives you a range between 32.9k and 31.5k, which also again includes this 1 hour gap and the 1 hour low, the key level over here. So that is very interesting indeed. And you're also going to fill this wick. And this wick is interesting because my chart has this wick, but many other charts do not have this wick. Now, if we go to the also bullish scenario over here, but then a WXY, we're also looking for still a bit more downside before continuation to the upside. That is, by the way, the same in the flat, looking for C, and then you look for new highs to come. But in a WXY, you're thinking about a three-wave structure, three-wave X, and then a three-wave Y. The thing is, in a wave Y is not allowed to be the same structure as wave W in a sideways double combo as explained earlier. And as W here looks very much like a zigzag, it's not a flat over here as price didn't take the high of A. Because this is a zigzag, wave Y is not allowed to be a zigzag, meaning that for a wave Y, you either want to see a flat, which could mean you're going to take the double top, which we have now here, high number 1, high number 2. This one is a little bit lower than the one on the left. So you have a double top before then a wave C to the downside. So you get a flat, or you're going to be looking for a triangle. And that is, of course, still the question, what do we going to get? However, if you compare the two scenarios locally, then in the bearish flat scenario, you also still expect a move to the downside. While in a WXY, you're also still expecting a move to the downside. Even if you get a flat scenario, you're still expecting lower prices to come in this range before continuation to the upside. Now, if we then zoom out and we also look at the medium time frame bearish scenario, as we have to always at all times keep a neutral stance towards the chart, then in a bearish scenario, we're looking for an ABC or a WXY, a bigger structure to the downside, where this is the most common target area for a wave B and a wave X if wave X passes the high of W, which is between the 1.236 and the 1.38 pulled from the high to the low, and the 1.618 is a less common target but a target nonetheless, and guess where it sits? 36.2k. The 36k level is very, very important indeed, but then you want to see an impulsive structure to the downside where then the target is above all going to be at least the double bottom here sitting at 24,750, but also the Bybit wick to 23.6k tends to get filled usually, so that would be a minimum target for me, 23.6k, but the range here is going to be between 23.9k and 18.5k, so that's definitely something to keep in mind. Now, people have been asking me questions about the volume of this push as well, and if we zoom out a little bit, look, if this is a wave 3 of an even higher degree wave 3, right? So this is then your 1, 2, this is the beginning of your big wave 3. Yes, it is correct. You really want to see volume pick up as price is moving impulsively to the upside. You want price moving parabolic, and you want to see volume moving parabolic as well. And I completely agree that the volume here is not really too great compared to what we had previously, right? But what we do have to keep in mind is we could have a potential 1, 2, then another 1, 2 of a lower degree before then you get a big push to the upside in a wave 3. And in a wave 1, the volume might not be as great as that we expect from a bigger, higher time frame wave 3. For me, it's more important at the moment to keep an eye on the local structures, because the local structures will decide the probabilities of another move down or continuation to the upside, which is also what I'll communicate in the probabilities at the end of this video. Now, if we are thinking about a three-wave structure, then for me, if we zoom in over here, a three-wave structure from the low has to make sense, because you're looking for not an impulse but a three-waver before then continuation to the downside. And in this scenario we then have an ABC where we have a 1, 2, 3, 4, 5 expanding diagonal wave A, wave B retracing to the 382 common target for a wave B, and then we're looking for a 5-wave structure in a wave C where the 1.618, guess what, is at 36.3 to 36.4k. Again, the 36k level important, and then you want to see an impulsive move to the downside. So we're not clear yet, right? You got to remain neutral. The local price action will show us what it wants to do, but this is definitely still a scenario that is on the cards. So it's good to at least plant the seed and make sure you remain a neutral bias and have proper risk management. Now, if we then look at the micro more bullish scenario, so basically saying, hey, we're not going down, we will continue to the upside, then we have to think about this being the low, this being wave 1 and wave 2. Now this is invalidated for me as this wick, even though it's only on my chart, I don't like the fact that price wicked the low of 1 over here, which for me invalidates an impulse. So I'm not looking at a 1, 2, 1, 2 continuation or a 1, 2, 3, 4, 5. Also, if this is your wave 4 and you're looking for 5, the low of wave 4 has overlap with the high of wave 1. So then you're going to be looking for diagonals anyway, and then you still look for a retracement eventually. So I'm not a big fan of this scenario, and the only alternative is what John showed in a Discord and what I showed in the video yesterday is a potential triangle over here for then A, B, C, D, E, but wave B is very, very short compared to wave A in time. Wave C on my chart goes below wave A as well, which invalidates a triangle for me because I just don't like it that like the wick took this low, and you know I've been counting on this chart for a very long time, so it's just something I don't like to see. So that is why the probabilities for the flat scenario or the WXY for me are at the moment higher, more locally. Now if we look at this range, the volume profile, because we don't have any horizontals going on, no time frame horizontals, naked point of controls, so I really enjoy using volume profiles from basically the beginning of this range here. And you can see the value area high, we dipped above resistance point, point of control, value area high, point of control, value area high. You can imagine if we move to the point of control, potentially we might move to the value area low. And that is then also where I have a support area, which is a golden pocket value area low confluence between 33.6 and 33.9k. And below that, we are then looking for the triple bottom, which other charts have. They have low number 1, 2, low number 3, which of course I don't have, but the triple bottom is something to keep an eye on, as well as this key level, which again is the low of the 1 hour candle. Looking at the CVD divergences, the bullish ones played out, but we still have this bearish CVD divergence because this high did not take the high on the left, so we still have a bearish CVD divergence. Good to know the 886 has been tagged, so any move to the downside is likely a wave C or a wave Y, highest probability for then continuation to the upside. What is also very common, a little bit of a golden nugget, is that if the 886 is hit, price retraces to the golden pocket, which as you can see has been the case as well. I quite often say this actually in videos, that if the 886 is hit, price tends to move back down towards the golden pocket to at least look for some support. And if you hit the 886 again, probabilities are high for continuation, but we haven't yet hit it for the second time. So yeah, probabilities still higher for me locally for a little bit of a move towards the downside. We do have news coming later today, 2:30 p.m. Central European time, so make sure you trade safe because volatility might kick in. And if we then look at the probabilities I mentioned, the local price action for me is by far most important at the moment. And if we look at the local structures, then as explained, for me, the either flat structure or the WXY structure has the highest probability, but in both cases, you're still going to be looking for a move down. In a wave C, you're going to have a wave 1, 2, and then continuation down in a wave 3, 4, 5. So you're going to be looking for the lower prices. And in a WXY, you're going to be looking for a flat in Y or a triangle where also you're going to be looking still for some lower prices as well. So that is currently the highest probability in this range. We'll see how price, of course, then continues today, because I won't be able to provide you probably with an update today because of working on courses for my other business, and then a speaking gig tonight, as I'm also a global keynote speaker. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.